1 ounce, period. And you will never have problems. You don't need proof coins. Don't listen to what they're saying. Oh, you'll make much more money on this limited blah, blah, blah nonsense. It's you want to have things that if all of a sudden you need, I mean, what is your motivation? People are doing this because they're scared of what's coming. So the most important thing is to have immediate liquidity, not dicking around with anything. Immediate liquidity with every company in America. It's Coca-Cola. It's Budweiser. It's just what everyone would recognize, period. And I think these companies that do this are beyond reproach and truly upset me. So you want to make it easy, don't buy any of that stuff, nothing, and just stick with American Eagles current year or Canadian Maple Leafs current year, and you will never, ever, ever have a problem. Because if I don't know what these things are, well, I guarantee you're going to have a hard time price shopping or finding a real price from any company, because if I don't know what they are, that means I don't sell them. And if I'm a company that's doing 800-900 million a year, $1 million in sales per year, what does that say? That says that these companies know exactly what they're doing, and they're purposely doing this to mislead the public. It's awful, truly.
In a compelling revelation, Andy Schectman sheds light on the deceptive practices within the gold industry, emphasizing the importance of informed purchasing decisions. With premiums soaring, Schectman shares a disturbing example where unsuspecting buyers were charged exorbitant prices for obscure fractional coins, highlighting the need for vigilance. He advocates for simplicity in investing, recommending the purchase of recognized, widely traded coins like American Eagles or Canadian Maple Leafs to ensure liquidity and avoid exploitation. This cautionary tale serves as a reminder to viewers to exercise due diligence and stick to reputable dealers when navigating the precious metals market. Don't forget to like, share, and subscribe for more valuable insights, and hit the notification bell to stay updated on our latest content.
In the 90s, no one bought bullion. Nobody. People only bought numismatics. And with $350 gold, you'd pay $380 for a gold eagle and $410 for a certified, uncirculated MS-62 $20 Liberty. There'd be no reason to buy bullion when you could buy a 100-year-old coin that was safe from confiscation, was a piece of Americana, was a real piece of history that had much better upside potential for $30 more. Well, that was 9% more or whatever, but so what? And when I was accumulating those coins early on in my career, that's all I would buy myself. I never really bought it because I was concerned about confiscation. I bought it because they are really a true rarity. They're 100+ years old, and technically they would be safe from confiscation according to the way the laws are written. But there's something about them when you're looking at a coin from 1880s, 1870s, 1890s, early 1900s. You're looking at a coin that's 100+ years old when the world was very different. There's something to be said for it, and I think that the wow factor is you get that for free. That's great. And I've never ever met anyone who has looked at a $20 gold piece. Most people don't know that gold was money prior to 1933, but you put a 100-year-old $20 gold piece in someone's hands and it's universal. Wow, that is so cool. I think there's something to be said for that. So it's just, I was always drawn to them. I gravitated to them. But since 2008, the premiums got so high that I had to move away from it, because in reality, as Richard Russell said, in the end, it's about the number of ounces that matter. But you have to tailor that with, not being penny wise and pound foolish. And I guess if you were able to get the pre-33 coins in the same ballpark as the new stuff, yeah, I would do it. I do prefer it and always have. And there's something to be said for something that, it's not rare, but it's not common either. And it's just a really neat way to accumulate gold. Just my personal preference more than anything. And, do it the right way. And you do, in theory, have safety from any governmental shenanigans. Nothing bothers me more than this. And I'm going to give people an example without mentioning. I had a conversation with this afternoon. He might even be watching this right now. I told him I had this interview tonight. And he told me who he was working with, and I try not to elevate myself by stepping on the competition. But I said, I bet you what you bought was fractional and stuff I've probably never heard of, and this and that. And um, he said, yeah, most of it is. And I'm going to give you an example of the way these people work. And they sold them one gold. I'm looking at the statement right now, and I'm not going to deviate from keeping privacy here, but they sold them one gold eagle, and then they sold them a bunch of quarter and half ounce, well, a quarter gold sea turtle. I have no idea what the hell that is. I've been doing this for a very long time, but his purchase price, and I don't know when he bought it, but it doesn't matter. The purchase price on the gold sea turtle quarter ounce was $780. We'll do the math. 7, 14, 21, 28. That's over $3,000 an ounce, right? For a gold sea turtle that I've never heard of. And I've been doing this since 1989, 1990. Or a gold quarter ounce phoenix that he paid $815 for. Or a gold Washington Monument quarter ounce that he paid $910 for. So, or I mean, it's pathetic. It truly is. These companies that sell this stuff, they are preying. They are predatory, and they are preying upon the public who goes to them because the spokesperson seem to have great integrity, and it's really awful. And it's a federally non-regulated industry. In my opinion, these people should be put in prison. And I'm dead serious about that. And I wish I could say, but I don't stoop to that level. I'm not going to do this publicly, but I can tell you, these are the kinds of things. A quarter ounce gold Washington Monument, $905. And one gold eagle, right? I mean, I don't care when they sold it to him. Gold's never been that high. A gold quarter ounce American Eagle right now would be, what, $2,200 ish an ounce divided by 4. And so it's really disgusting. So let's just make it easy. You want to open up an IRA, hopefully it'll be with us, but I mean, just make it easy. American Eagles, Canadian Maple Leafs, 1 ounce, period. And you will never have problems. You don't need proof coins. Don't listen to what they're saying. Oh, you'll make much more money on this limited blah, blah, blah nonsense. You want to have things that if all of a sudden you need, I mean, what is your motivation? People are doing this because they're scared of what's coming. So the most important thing is to have immediate liquidity, not dicking around with anything. Immediate liquidity with every company in America. It's Coca-Cola. It's Budweiser. It's just what everyone would recognize, period. And I think these companies that do this are beyond reproach and truly upset me. So you want to make it easy? Don't buy any of that stuff, nothing, and just stick with American Eagles current year or Canadian Maple Leafs current year, and you will never, ever, ever have a problem. Because if I don't know what these things are, well, I guarantee you're going to have a hard time price shopping or finding a real price from any company, because if I don't know what they are, that means I don't sell them. And if I'm a company that's doing 800-900 million a year, $1 million in sales per year, what does that say? That says that these companies know exactly what they're doing, and they're purposely doing this to mislead the public. It's awful, truly.
In this next segment, Andy Schectman delivers a sobering analysis of the precarious state of regional banks and the looming threat of bank failures. With a significant portion of commercial leases and loans held by these banks, Schectman warns of the potential for a domino effect triggered by just one bank failure, leading to a cascade of collapses. He underscores the global nature of the commercial real estate crisis, highlighting how recessions in other countries compound the systemic risks faced by banks worldwide. Schectman predicts that between March of the current year and March of the following year, several banks may succumb to these mounting pressures, emphasizing the need for caution and preparedness in navigating the financial landscape.
I think there's a high probability, and I don't know how big it needs to be. I mean, yeah, I do 100%. Look, I mean, you got all of the commercial leases and loans that need to reset. They're owned primarily 70% by the regional banks. You have the majority of the small businesses that their loans and leases are all held by the regional banks. You have these banks that are underwater and rates are going to go higher. And all it will take is one bank to fail, just one bank to fail and be bailed in. Now, we haven't seen that yet. It will create a cascade. And I really do think ultimately that is what they are looking to do, is to call the banks. And you even have Powell coming out and saying that he expects consolidation, as he calls it, in the regional banks. And I do. To come out and say in 2024, yeah, I would have thought it would have happened already. I would say between March of this year and March of next year, it would be crazy to not see several banks fail. And how big they are and what is the catalyst, not sure. But yeah, we are not out of the woods, not even by a long margin. And I think, again, you look at it's not just in the United States, it's kind of a global cascade of commercial real estate issues. And, you're starting to see the recessions take hold in Japan and in Germany and the United Kingdom. And we're not immune to these problems and the commercial real estate problems that are very systemic. These banks are all tied together. Borders don't matter. So yes, I do expect to see more bank failures and maybe several between this March or between today and a year from March, which all of the lending programs would have expired by that point.
In today's discussion, Andy Schectman sheds light on the evolution of precious metal investments and emphasizes the importance of making informed choices in uncertain times. He highlights the pitfalls of certain gold purchases and advocates for simplicity and liquidity, endorsing American eagles and Canadian maple leafs. Furthermore, Schectman warns of the looming risks posed by regional bank failures and the interconnectedness of global financial systems. As we navigate these complex economic landscapes, it's crucial to stay vigilant and prepared.